Okay, welcome everyone. Good morning. My name is John Von Paris, and I am the chairman of the MDTA Finance Administration Committee. I hereby call the meeting of the Finance and Administration Committee to order at 9 a.m. In accordance with the live streaming law, this meeting is being conducted via video conference and is being live streamed on the MDTA Finance and Administration Committee webpage. All members will have their video active during the entirety of the meeting. To minimize background noise during the call, I would ask that everyone on the line please mute your phones except when speaking. I ask that those who are presenting or answering questions to please turn your video and audio on when speaking. When you're done, please turn your video off and put your audio on mute. There are no members of the public, no elected officials, and no media who have pre-registered to comment at this morning's meeting. This time we will begin with agenda item number 1, the approval of the open meeting minutes from April 10th, 2025. Is there a motion to approve the minutes as presented?
So moved, Member Carroll.
Thank you, Member Carroll. Is there a second?
Second, Member Rosen.
Thank you, Member Rosen. All those in favor?
Aye.
Aye.
Opposed? Motion carries unanimously. Thank you. Minutes are hereby approved. Item number 2, contract number MT0021139, HVAC and ATC maintenance repairs for the Nice Bridge. Tony Kashera is here to present. Good morning, Terry. Tony. Hello? Everybody hear me?
Yes,
Yes.
sir, I can hear you.
Okay. This morning with us.
Member Vaughn Paris, this is Chantel Green. I'm not sure if you can see me. I don't know what's going on. But if you don't mind proceeding to the next agenda item, I'll get back to you shortly. Thank you.
Okay, very good. Thank you, Chantel. We will go move to item number 3, contract number SV0021121, traffic and revenue services, and Cheryl Lewis Orr is here to present. Morning, Cheryl.
Good morning. This item is to seek approval from the Finance and Administration Committee to present contract number SV0021121, Traffic and Revenue Forecast Services, to the full board at its next scheduled meeting. This contract will provide continued traffic and revenue forecasting services for the MDTA and assist in the continual confinement of the agency's traffic and revenue projections. These projections are used in planning to meet the agency's operating and capital needs and other related forecasting tasks. The contract term is for 3 years with 1 2-year renewal option. An analysis of the evaluation committee concluded that the proposal submitted by CDM Smith, which is the incumbent, represented the proposal that will be the most advantageous to the state for price and other requests for proposal evaluation factors. It is recommended that the traffic and revenue forecast contract number SV0021121 be presented to the full MDTA board at its next scheduled meeting. Any questions?
Okay.
Thank
Cheryl,
you.
thank you. Thank you.
Sure. Mhm.
Okay. Is there a motion to advance this item to the full board?
So moved, Member Rosen.
Thank you, Member Rosen. Is there a second?
I'll second that, Member
Member
Carroll.
Ardinger,
Okay.
Sorry.
Member Carroll, second. Is there any further discussion? Okay. All those in favor?
Aye.
aye.
Opposed? Motion carries. Thank you. Thank you, Cheryl.
You're welcome.
Okay, we will move to another approval item, number 4, contract number J01B46000043, Rubric Software. They say that rubric?
That's
I
correct.
guess, okay, I'm getting close. Okay, and David Goldsboro is here to discuss this item and explain everything here. So, good morning, David.
Good morning, Member Von Paris, and members of the Board and Finance Committee. It's great to see everyone. For the record, David Goldsboro, Director of Information Technology for the Authority. The purpose of this memorandum is to seek approval from the Finance and Administration Committee to present contract number J01B46000043, which is the rubric software maintenance, to the full MDTA board at its next scheduled meeting. In summary, the rubric software maintenance provides backup and recovery functions for MDTA's file shares and applications. It's used across the enterprise in both of our data centers. It's required functionality for our disaster recovery plans and gives us mission critical abilities to recover from any critical incident that occurs within the data centers. It matches up with the business impact analysis that we performed as part of our disaster recovery analysis, and the system has been working very well for years. The total amount of the contract for the 3-year term is $2,375,365. As this exceeds the MDTA's delegated authority, Member Von Paris, the award of the contract would be pending approval at the soonest available BPW meeting. And with that, I would be happy to take questions.
Sure. Thank you, David. I just have a question. On the estimate, the engineer's estimate, can you comment on that a little bit, the difference there?
Yes. So the quote that came in was delayed from rubric. So what the procurement decided to do to get the fund cert out the door and to get everything situated, we used a dollar amount from several years ago just to get the item parked. And then we plan to do an update as soon as we got the final quote from rubric. So it was expected to be higher just because the quote was 3 years removed from our previous renewal. We also added some additional modules to allow us to do a deeper forensic analysis in the event that we had some sort of catastrophic event. There's a analytics that we can get that would allow us to backtrace those types of things and enhance our recovery efforts. So the amount was slightly higher, but it was due to an outdated quote, mainly just, as I said, to get the fund cert created. And I would ask Jeff Davis if he wants to comment on that, because Jeff was very helpful with this.
Jeff, do you have any comments?
Yeah, and I guess I was invited to speak. Good morning, Jeff Davis, Division of Procurement. Yeah, so the fund cert is often a best guess, and it's not as detailed as an engineer's estimate. So what our procurement officer will do prior to award is request an updated fund cert from David, because we cannot award it without certification of fund availability. But we need fund availability to start the procurement, so we can do it in good faith.
Okay, are there any other questions from any board members? Okay, is there a motion to advance this item to the full board?
So moved, Member Rosen.
Thank you, Member Rosen. Is there a second?
Member Ardinger, I'll second.
Thank you, Member Ardinger. Is there any further discussion? Okay, all those in favor?
Aye.
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 Opposed? Okay, motion carries. Thank you very much. Thanks, David and Jeff.
Thank you, Member Von Paris. Thank you, everyone.
Okay. I've had some computer difficulties this morning since 6 o'clock. So all of a sudden I just disappeared on the call. So anyway, on the meeting, but I'm back. Okay, we will move on to the next item, number 5, approval. This is an approval item. Investment Committee report. Alan Garman is here to present. Hi, good morning.
Thank you.
And we have Clayton. Clayton, you're here too. Okay,
I'm
hi,
here as
Clayton.
well. Thank you. Thank you for the
Good
introduction.
morning. Morning to
morning.
both of you.
Clayton Bewick, Investment Administrator for the agency. Alan and I will tag team this presentation and talk about the portfolio, the strategy, the markets, and give you an update on performance through the recent quarter end. The objective of the presentation is to seek your concurrence and recommendation to move to the full board for continuation of the strategy and the benchmarks. But before we get there, we want to share with you really 2 takeaways. One is that the portfolios remain in compliance with the policy, the guidelines, the objectives, and the benchmarks, and that there have been no violations with respect to compliance for the portfolios. Always pleased to report that, and would expect nothing less. On slide 3 of the presentation, you'll see the pie chart showing exposures to the various market sectors. We continue to see a big weight toward the MLGIP. That's the local government investment product. We've slowly begun transitioning some assets out of this portfolio or strategy, given the kind of readjustment of the yield curve. As the yield curve normalizes, we'd expect to see even more flows out of that into more compelling opportunities in sectors such as treasuries and agencies. And maybe at this point, I'll turn it over to Alan to talk about financial markets and the economy for a minute.
Thank you. Yeah, normally we have a slide or 2 on the bond market and the Fed, but we thought it might be a little easier this month. We had a Fed meeting yesterday and wouldn't have had those materials available in time for the mail out. Yesterday, the FOMC held its Fed funds rate unchanged in its target range of 4.25% to 4.5%. They cited solid pace of economic activity, low unemployment, though inflation remains somewhat elevated. They continue to work toward their dual mandate of maximum employment and low inflation targeted below 2% in the long run. And so their core PCE index, which is their preferred measure of inflation, has been running, above that 2% target. And so the most recent read was about 2.6%. And yesterday's statement noted that there's increased economic uncertainty and there's risks to both unemployment and higher inflation. So they're focused in on, discussions of tariffs and what that might mean for, both unemployment and inflation. In terms of Fed funds futures, the market at least is pricing in about 3/4 point cuts before the end of the year. So the market would be pricing in an expectation of a slowdown that would drive the Fed to start cutting again or resume its cuts. What we've seen in terms of the bond market is significant rate volatility this year, and that's been in response to the tariffs and the economic outlook. In particular, we're mostly invested in the 2 to 10-year parts of the curve, and so we've seen rate declines of 30 to 50 basis points in that part of the curve. And that's translating into mark-to-market gains in our portfolios. And Clayton will discuss investment returns on slide 10, but we're seeing trailing 12-month returns that are higher than our index yields. So that's really a function of the rate declines and some mark-to-market gains. Longer term, we expect to earn essentially some element of the yields of those indices and the yields of the portfolios, but we get kind of whipsawed around by mark-to-market gains and losses. So I'll turn it back over to Clayton to run through the rest of the slides.
Well, thank you, Alan. So moving on to slide 4, we observe the maturity distribution for the total assets of the agency. Significant percentage, as you can see, is in the short 0 to 1 year bucket, which is comprised of things such as bond service monies, capital spending monies, and other cash requirements of the agency on an ongoing day-to-day basis. Are there any questions at this point? If not, on slide 5, we focus in on the total return portfolios, i.e. the general and the M&O accounts. The M&O account is permitted to invest up to 15 years. The general account, much bigger pool of assets, is only limited to 5 years. And so you'll notice that that a significant percentage of these total return assets are invested within 5-year maturities. These charts tend to evolve over time. You won't notice from quarter to quarter a lot of changes in the maturity distributions or the sector allocation, but they do change, and as we're presented opportunities, we'll make decisions and see what's most compelling in the markets. Moving on to slide 6, we have our compliance report, two-page report here, 6 and 7. You can see the ratings of each of the positions in the portfolios, and you'll notice that on the far right there, we do remain in compliance with the mandates, the policy and guidelines as we've been directed. Following on to slide 8, another way to look at the bar chart that was provided earlier just shows a breakdown of total return versus match funding accounts. Typically, these shorter term match funding assets are met with maturities that precede or coincide with expected spending patterns. And so we're very conservative and conscious of cash flow needs of the organization. On to slide 9, we remember what our objectives are, what our strategy is, and present this to you. I think here we need to highlight, again, as Alan has just mentioned, some of the volatility, especially recently, that's been inherent in the markets, given some of the political landscape. The longer maturity or the longer duration parts of the portfolio will tend to experience the most return volatility as rates move. You've kind of seen this notion of the dog wagging the tail recently, and although the front end has come down quite a bit, the back end of the yield curve has gotten or experienced quite a bit of rate movement. Finally, on to slide 10, we show the performance. You can see in the top table there the performance for the portfolios. Capital and bond service accounts are returning right in line with expectations, and short-term interest rates at just over 5%. The longer-term total return portfolios have done quite a bit better than their prevailing yields, and again, that's a function of not only coupon, but changes in interest rates recently. And so as you look at the bar chart on the bottom right there, the 12-month period, quite strong returns as rates have come down, and we've gotten some good performance from changes in prices due to rate changes. With that, and no questions, we'd like to seek your concurrence and recommendation to move to the full board for approval of the continuation of the investment strategy and benchmarks. Thank you.
Thank you, both of you. Any comments from any of the members? Questions? Okay. All righty. Is there a motion to, is there concurrence in the motion to advance this item to the full board for consideration?
So moved, Member Carroll.
Thank you, Member Carroll. Is there a second?
Second, Member Rosen.
Thank you, Member Rosen. Is there any further discussion? Okay, all those in favor?
Aye.
Aye.
Opposed? Motion carries. Thank you. Clayton and Alan, thank you very much for your presentation this morning.
Thank you.
We will move on to the next item, number 6. Let's see. We'll go to Jeffrey Brown, fiscal year 2025 operating budget versus actual spending review. Good morning, Jeffrey.
Good morning. First of all, can you hear me?
I can.
Okay, great. Sorry, I've been having audio issues. I can't hear you guys except through a call in. So I called in and it sounds like it's working. So I apologize for if there's a diminished audio, but at least you can hear me. That's good.
Clear. Thank you.
Okay, starting for the record, my name is Jeffrey Brown, Budget Director for the MDTA. I'm here to give an update for the budget versus actual performance through the third quarter for fiscal year 2025 for the full year 2025 amended budget. As of March 31st, we have spent 63% of the budget compared to a target of 72%. Except for fixed charges, all object codes were at or below budget. Moving to more detail, salaries and wages, we're at targeted spending levels with a 72% spend rate. Communications, Object 3 is below budget with a 21% spend rate due to the state radio invoice not being paid yet. This will come closer back to budget. And looking forward, I looked into April. It looks like that has been paid, so it'd be much closer to budget going forward. Travel, Object 4 is below budget with a 25% spend. This is due to the normal seasonality where more activity occurs in the third and fourth quarter. However, it is trending lower. It looks like there are potential for savings. Fuel and utilities, Object 6 is at a 65% spend, which is reasonably close to budget. And again, looked at a month further, and it is trending just slightly below budget, but it is close to budget. Moving to Object 7, motor vehicle operations and maintenance is below budget with a 47% spend rate. Moving the drivers of this are vehicle purchases, Object 0701, which is below budget with a 42% spend rate. And that's because all the police vehicles have not been received. Looking forward, it looks like most of them have been received, except for 3, which we expect in the next couple of weeks. So this should be coming back close to budget. Vehicle gas and oil is below budget with a 34% spend rate. This is due to the easing gas prices compared to budget assumptions. So we do expect some savings there. Vehicle maintenance and repair slightly below budget with 65%. That's really almost pretty much close to on budget. Large vehicle maintenance and repair is above budget with an 83% spend rate. What's driving this is we had ordered dump trucks, which due to supply chain issues haven't come in. So there's been much greater maintenance on the remaining supply trucks to maintain that. So there's a potential for some exposure there. All other sub-objects were within the budget guidelines. Moving on to contractual services, Object 8, we are below budget with the 52% spend rate. The drivers are advertising, which is at 46% spend. But again, most of the key activity occurs in the third and fourth quarter. So we do expect this to come back closer to budget. Engineers is below budget with a 40% spend rate. Most of the activity occurs in the third and fourth quarter, but having said that, it does look like this has the potential for savings. We don't expect we'll spend all of this for this year. Equipment repairs and maintenance is below budget with a 3% spend. This is due to the timing of an IT invoice, which is coming in. So this will bring us back closer to budget, but there were some savings involved. So we do expect to be under budget. Building repairs and maintenance is below budget with a 59% spend. Again, typically third and fourth quarter is heavier. I looked ahead to April, it's closer to 70% spend, so this is coming back close to budget. Education and training is below budget with a 41% spend. Again, normal seasonality, third and fourth quarters is heavier. However, since COVID, we haven't really bounced back to normal education and training that was seen in the past, so there is the potential for savings here. Management studies is below budget with a 25% spend. This is dependent on when activity occurs. And again, looking forward, we're getting closer to budget in the following months. Also, security services below budget with a 41% spend. Fiscal services is close to budget with a 62% spend, and Easy Pass Service Center cost is below budget with a 51% spend. But again, there is a lot of activity in this, and we do expect this to come close to budget. Other contractual services is below budget with a 42% spend, and this is trending lower, so there is a potential for savings. Moving to object 9, supplies and materials below budget with a 58% spend. Drivers are roadway maintenance, which is at 51% spend. Again, timing of activities is driving this. Salt is below with a 52% spend. Again, reduced winter storm activity will result in some savings in this object. Uniforms is below budget with a 62% spend. This is driven when orders are received, but that's not way below, so that's going to be close to budget. While ammunition is over budget with an 87% spend. This is potential exposure, and this is due to how the orders come in. We expect them to hit prior years, but they're hitting this year because of supply chain issues, so this one's challenging to forecast, but there is potential risk there. Transponders is close to budget with a 62% spend. Again, we expect orders to come in and bring this close to budget. Replacement equipment object 10 is below budget with a 27% spend rate. The drivers is really microcomputers, which is at a 30% spend rate. We do expect some additional charges, but due to some pricing breaks and the fact that we've pretty much outfitted the organization at this point, we do expect some savings here. Other replacement equipment, 1099 is below budget, and this is at 7%, and we do expect savings here, as I don't think the orders that we were expecting will be this year. Additional equipment object 11 is below budget with a 36% spend, mostly due to the timing of orders. And then fixed costs, as mentioned, is over budget with a 124% spend rate. There are two key drivers: insurance paid, typically vehicle insurance, which is close to budget with a 64% spend rate. There's potential for some slight risk there because we do see increase in premiums. And then insurance 1309 is over budget with a 129% spend rate. As mentioned in previous committee meetings, this is due to the property and liability insurance increased costs due to market pressures. So at this point, we are still monitoring this close as we get to the end of the year, but any overspending that we see, we believe we can offset with underspending in other areas. But again, as always, we will continue to monitor this closely and change as needed. That concludes my presentation. I'd be happy to take any questions at this time.
Thank you very much, Jeffrey. Are there any questions? Okay, well then, is there a motion to advance this item to the full board?
I think this is just an update.
Just an update.
Oh, I'm sorry. The board would be upset if we did that, wouldn't they? Sorry about that. I have my my daughter-in-law just went in to have a baby. So anyway, she's delivering this morning. So I got my mind on that a little bit. I apologize. So we'll see how that works out. So I do apologize. Thank you very much, Jeffrey, for your update. Appreciate that. Sorry about that, board members. We will move on to the next item. And Jennifer Stump is here to talk about this is another update, third quarter budget comparison. Good morning, Jennifer. How are you?
I'm good. Good morning. Congratulations on your upcoming grandchild.
Thank you.
For the record, I'm Jennifer Stump, the Assistant Capital Program Manager. Today, I'm presenting the third quarter review of the fiscal year 2025 capital budget versus the actual spending as outlined in the fiscal year 25 to 30 draft CTP. This information will also be presented to the full board on May 29th. As of March 31st, 36.5% of the fiscal year 25 $809.8 million budget was spent as compared to the targeted spending level of 75%. Actual spending through the third quarter was $295.9 million. 33 of the 91 projects budgeted in fiscal year 2025 were within acceptable spending limits of 50 to 100%, which is plus or minus 25% of the 75% target. Due to normalizing invoicing, a plus or minus 25% threshold was determined to be reasonable. Attachment A details 10 projects that were budgeted with the highest fiscal year 2025 budgets. Actual spending through the third quarter on those 10 projects was $215.1 million. The overall spending in fiscal year 2025 remained low through the third quarter due to project invoicing delays related to the Key Bridge rebuild. Specifically, only Kiewit's expenditures through January have been posted. The general engineering consultant contract just started invoicing and therefore are not reflected in the third quarter year-to-date expenditures. And State Highway Administration has yet to invoice MDTA for the interim GEC or other state highway costs. Additionally, the rehab decks of the eastbound span, Phase 1 deck widening and replacement of deck truss spans project had a scope change that moved a large portion of the anticipated work to Phase 2 of the overall project. Negotiations with the contractor for a second package of Phase 1 to execute an additional contract were not successful. However, MDTA has been negotiating with the contractor to further add a portion of work in order to take advantage of the large equipment already mobilized to the bridge site. That concludes the quarterly update, and please let me know if there's any questions.
Thank you very much, Jennifer. Are there any questions? Any board members?
Just one question related to since it's pretty significant discrepancy for the Key Bridge rebuild. Do we have any idea if that's going to all be spent this year relative to the 204.9?
Of that original budget?
Yeah, versus the 204.9.
No, the original budget that was estimated during the draft, because this is numbers that were put together during the draft last year when everything just first happened. No, they won't be spent this year. Much of that funding has already been rolled forward into future years.
Gotcha. Okay. Thank you.
Mm-hmm.
Member Rosen, any other questions? Okay. Jennifer, thank you very much for the update. We appreciate it. Thanks for everything you do. Thank you. We will move on to item 8. It's an update also, quarterly update on traffic and revenue on the actual performance of traffic and revenue compared to the forecast through March 31, 2025. Walter Lawn is here.
Yep.
Hi.
Good morning. Yep. Yeah, I'm Walter Lawn. I'm the revenue manager. And like you said, here to give the quarterly and year-to-date update for traffic and revenue. There's the key takeaways section on the first page there. So for the period ending March 31st, 2025, overall collected revenue was above forecast by $20 million or 23.5 when adjusted for a timing difference. The next takeaway, an increase in revenue collected by the Central Collection Unit, or CCU, has improved our forecast performance. And for instance, the video toll revenue collected was 4.2 million higher than forecasted through this period, and civil penalty fee revenue was 21.6 million higher than forecasted. The third takeaway is just year-to-date toll transactions and revenue decreased relative to the same period last year, as we would expect. It's due to mainly to the Francis Scott Key collapse. I just want to kind of point that out there. It's about 3.2 million transactions and $19.3 million. All right. So if we scroll down to page 3, attachment A, we have a summary here. So we've got the Easy Pass forecasted revenue was 454.9 million. The actual was 451.3. So we were under forecast by about 3.6 million in the Easy Pass category, which is within 1% of the forecast. I think it's 0.8%. And of that, a portion of it's due. We had the accident at the Fort McHenry Tunnel where there was the fire underneath the gantry. And so a portion of it is with the equipment being damaged. So all in all, not bad there. Then for the video, admin, and pay-by-plate, the forecast was 98.2 million. Actual was 121.8. And so this is where we're really exceeding the forecast now. So we would be 23.6 million over, plus of the increased CCU payments that are coming in. There was $3.5 million that we had received during the month of March that just didn't get finished, reconciled, and being processed until the beginning of April. So ultimately, we wanted to put it in because we did receive the cash. Then if you go down to attachment B, Again, it's just breaking down our actual revenue into the different categories, a little more granular. And then giving a breakdown of that timing difference of the 3.5 million of the CCU payments. There was about 800 grand that were video tolls and 2.7 million that were civil penalty fees. Then if you scroll down to page 4, attachment C, it's just showing the over or under performance by each category. So again, kind of rehashing what we saw above, but Easy Pass under, pay by plate slightly above, video above, and administrative is the biggest overachiever. That's it. So any questions?
I do have a, go ahead, Bruce. Bruce, you have a question? Okay. Can you hear me?
Sorry, did you reference me? I don't have any questions, no.
Oh, it on my screen, you came up on my screen. So I don't know, I think there's some stuff going on with technology today. Maybe it's on my side here. I did have a question on the fire that damaged the gantry. Did we lose revenue because we didn't go through? Because how did we lose revenue from that? Can anybody explain that? Was it because of delays? People went another. I'm just curious. I don't know if we can, and if you don't have the answer, you can get back to me.
Yeah, I mean, I'll explain some of what happened. So the fire was directly under the gantry. In that lane 2 portion, it damaged the equipment. So it took some time to do the assessments of the structure and make the repairs. So, that's the revenue loss that we're, have as part of any facility damage. We'll be including it in what we will pursue against insurance companies of others.
Okay, so it was out of service for a while. The gantry.
Yes.
Okay. All right. Very good. Thank you. All right. Walter, thanks again.
Actually, I just have one question related to the for the Easy Pass. So it declined there. So is that less usage of the Easy Pass?
That's what he was referencing. It wasn't usage. It was the equipment wasn't able to monitor the traffic. Yeah.
But so our usage is generally still in line for Easy. That's really where I was going. I would make sure that we're maintaining Easy Pass utilization, if not increasing it.
Yep, it's definitely staying. It's like within 0.3% of the forecast with kind of take out the damage from the Fort McHenry that caused that issue. So it's right in line. It's slightly below, and I think it's mostly in like away 2-axle vehicles is where we see the underperformance to the forecast.
Okay, thank you.
Yep. Any other questions? And I apologize for jumping the gun there, Member Rosen, but that was a very good question. And Bruce, thank you for your clarification. And again, thank you, Walter.
Yep. All right.
We will move back if we're ready to item number 2. Are we ready for the presentation on item number 2, contract for the HVAC?
Yes, thank you for your patience. Good morning. For the record, I'm Agnes Vadas, Manager of Service and Maintenance Contracts for the Division of Procurement at the Maryland Transportation Authority. I hope everyone can hear me.
I can hear you. Yeah.
Okay, great. We are seeking recommended approval for the Finance and Administration Committee to present contract number MT 002-11390 HVAC and ATC maintenance and repairs for the MDTA Harry W. Nice Milton Bridge facility to the full MDTA board at its next scheduled meeting. This contract provides on-call HVAC and automated temperature control maintenance and repairs for the Harry W. Nice Bridge facilities which include the police administration building, the ITS and electrician building, the maintenance building, and the auto shop garage. The amount that we are seeking for approval for is for the 3-year term, $635,090.20. There is a 2-year renewal option for $446,638.05 for the total 5-year amount of $1,081,728.25. The terms we are hoping for is June 1st, 2025 through May 31st, 2028 for the initial 3-year option. We received 3 bids, but one was rejected. There is an MBE goal established for this procurement, which was 14%, and there was a 1% VSB goal established for the procurement. If there's any questions for me, I'll be happy to try to respond.
Okay, thank you, Agnes. Are there any questions from any members? Okay, is there a motion to advance this item to the full board?
So move, Member Carroll.
Thank you, Member Carroll. Is there a second?
Second, Member Rosen.
Thank you, Member Rosen. Any further discussion? Okay, all those in favor?
Aye.
Opposed? This motion carries. Thank you. Agnes, thank you for your presentation. Well,
Thank you very much.
Sure. Okay, we've covered everything on the agenda. Is there a motion to adjourn?
So moved, Member Rosen.
Thank you, Member Rosen.
Second that, Member Carroll.
Thank you, Member Carroll. All those in favor?
Aye.
Aye.
Okay, we stand adjourned. Thank you.
Have a great
Aye.
day, everyone.